What's up, everyone? Hope everyone had a good week. Happy Mother's Day to all the mothers out there. And let's just get straight into it. Dow Jones up 2.6% on the week, going from 23,723 to 24,331. Nasdaq up 6% on the week, going from 86.05, we'll call it, to 91.21. And S&P up 3.5% from 28.30 to 29.29. I want to quickly take a closer look at the S&P. If you recall last week, I thought we were going to get into the lower band of trading due to Warren Buffett's words saying that there were no deals out there that he could take advantage of. But as you'll see, the bottom of the market was actually at the very beginning of the trading day on Monday, and we moved up pretty much every day after that. And zooming out, you'll see some of the key levels I've highlighted on several past videos. I thought we were going to drop below that 50% retracement level of 27.90, but we actually held right at it. And as a result, we're in the range between the two bands, the 50% retracement and the Fibonacci 618 level. What's up next? Well, the 200-day moving average would be the next level. We can breach the Fibonacci 618 retracement level, or we'll call it 2950. And can we do it? I think we probably can. It seems like the momentum algos are kind of in control at this point, and momentum is up. But there are a few things that worry me. Here I have a chart of Tesla, and you can see Tesla peaked right when the market peaked in February. And I use Tesla as my greed or exuberance indicator for the market because this company is extremely popular among millennials, momentum traders, and there's really no fundamental way of trading the stock. It just goes based on random news that make people feel good about the stock. They supposedly, made a profit last quarter, but in my mind, that was just accounting manipulation of numbers. And as you can see, we're almost close to the all-time high in Tesla again. And once it gets there, I feel like there's just too much exuberance in the market. But the market's not going to just die. I should say the bull run isn't going to just die because Tesla's reaching an all-time high. Don't get me wrong there. But I'm going to go over a couple of, we'll call it old news reasons why we could potentially be seeing a near-term top. On March 8th, I used the Kubler-Ross 5 stages of grief to explain why we weren't done dropping yet in the market because we were still in the bargaining or depression stage, and the market wouldn't be rid of this coronavirus correction and whole cycle, if you will, until we got to the acceptance stage. I believe we're actually pretty close to the acceptance stage now. As you can see, this is just a copy and paste from March 8th, and we're seeing some reopenings, and I'm going to consider that as back to routines. We're looking at facts and odds more. It looks like the death rate is not as high as we thought it was back then. People were saying it was 4%. I called that BS, and it looks like it's closer to 1, maybe even under 1. And overall, we're getting a better handle on the virus, and it looks like travel is picking up, even though it is from very low levels. However, because of this, the fact that we're getting to the acceptance stage, I think the cause for the next correction could be none other than what caused a correction in 2013. As you can see here, I have a few charts from Sunshine Profits regarding the taper tantrum back then. And what happened was the Fed said that they would stop buying bonds as aggressively as they had since the Great Recession. And as you can see here, the 10-year Treasury yields rose sharply, meaning the bond prices fell. Also, the dollar rose sharply, causing gold prices to fall. Eventually, the markets fixed themselves after, we'll call it a year and a half. But we did see near-term drop in bond prices, and it threw a lot of things out of whack. Now, if you recall, the reason for this entire stock rally is because the Fed put so much money into the bond portfolio, and that's what's causing a lot of some of these pension funds that just randomly rebalance. Well, I shouldn't say randomly, more like blindly rebalance to get to their 60-40 portfolio split or whatever, were forced to buy equities because the bond prices went up so much from the Fed buying them. Now, the Fed were to stop buying bonds, and they have several trillion in bonds now. Well, let's think about what happened. The bond portfolios for these funds, would go down as a percentage of their entire portfolio, meaning they would have to buy more bonds and sell stocks to get back to balance. And because there's so many trillion in the market, this could automatically just send us down. And once we go down, all these momentum algos, these momentum traders that are chasing on the way up, well, they're going to be pushing us down very quickly and sharply. And that could either be the next correction or that could be the cause for the next retest because there's just so much money in the market that I feel like a blind rebalance, if you will, from these pension funds could really damage the stock market, even though it's not justified and will correct itself, as we saw when the taper tantrum hit in 2013. So ending on our fun news for the week, well, this is more of a feel-good story, but as you can see, the man left a $1,300 tip for a struggling restaurant after it reopens. You got to really feel for some of our restaurants and restaurant owners. They had to shut down, not because they were serving crappy food or their service was bad. They were literally shut down so that we could help stop the spread of this virus and not have our hospital system overwhelmed, through no fault of their own. Some of them are finally able to open now, and we should really be supporting, our local businesses. Again, it's really not their fault that they were shut down. And for some of you, I know, that are fearful of eating out because maybe the chef or the server who packs the food may have COVID. Well, COVID dies at a temperature of about 140 degrees Fahrenheit. So if you just cook your food, heat it up in the microwave before you eat it, even if it's takeout, you should be okay. Any COVID-19 should die. So let's continue to help our businesses, not just restaurants, but there's plenty of other small businesses that could use our help. Hope everyone has a good week. Hope everyone enjoyed how short this video was, and we'll see you guys next week.